Welcome back to Ground Rules, where we go beyond the numbers to bring you the stories shaping South African agriculture. As we move into the new month-end demand is expected to give certain fresh produce markets a welcome boost, but there are also some warning signs emerging. Tomatoes and citrus are already under immense pressure from rising volumes, and with next week Monday's public holiday on the calendar, markets could quickly become oversupplied if too much produce arrives later this week. So, will stronger demand be enough to support prices, or will this unusually warm winter continue pushing more produce to market earlier than normal? Let's take a closer look. Potatoes had a strong week, with the average price increasing 6% to 64.63 Rand per 10 kilogram bag. Current market averages were extra large Class 1 modules at 55 Rand per 10 kilogram bag, large Class 1 modules at 82 Rand per 10 kilogram bag, medium Class 1 modules at 65 Rand per 10 kilogram bag. That's 39% higher than this time last year, while the volumes remain 13% lower year on year. Last week, we started off well, but demand weakened over the weekend and wasn't strong enough to absorb all the available supplies. This week should still benefit from month-end buying patterns, but the slow start to the trading may place some pressure on prices. Another concern is next Monday's public holiday. If too much stock enters the market towards the end of the week, markets could begin next week carrying excess inventory, therefore creating additional downward pressure on prices. Moving over to tomatoes, the tomatoes remain one of the most pressured markets. Prices fell another 10%, averaging 10 Rand per kilogram, while the volumes increased by 14% week on week. Exactly as expected. The concern is simple. There are already large volumes on the market floor, and even more is expected to come into market. Unfortunately, the stronger consumer demand this week is unlikely to absorb all the additional supplies, meaning that tomato prices could remain under significant pressure throughout the week. Onion prices declined 15%, averaging 85.96 Rand per 10 kilogram bag. Current prices include brown Class 1 medium onions at 114 Rand per bag, white Class 1 medium onions at 109 Rand per bag, and red Class 1 medium onions at 203 Rand per 10 kilogram bag. The market is beginning to resemble the pricing pattern seen during 2023, raising concerns that onion prices could come under much greater pressure during September and October. Current expectations are for relatively high market volumes to continue through to the end of the year. Moving over to carrots, carrot prices eased another 3% to reach 5.50 Rand per kilo. The colder weather experienced over the weekend may temporarily slow supply, while the stronger demand could help support prices, or at least just keep them trading sideways for this week. Looking further ahead, however, carrots are still expected to face renewed downward pressure during August and September as the larger volumes reach the market. Sweet pepper prices also softened last week. The average price declined 7% to reach 16.54 Rand per kilogram. Breaking it down, we see green pepper prices surging an extraordinary 413% to reach 10.94 Rand per kilo. Yellow peppers declined 30% to reach 29 Rand per kilo, and red peppers fell 18% to reach 30 Rand per kilo. Overall, pepper prices could remain relatively firm through August before easing as the warmer conditions bring larger harvests to market, possibly earlier than what we would expect in a typical season. Elsewhere in the vegetable market, cabbage prices declined to 3.28 Rand per kilogram. Sweet potatoes eased to 4.06 Rand. Spinach prices dropped 16% to reach 4.28 Rand. Butternut increased to 5.53 Rand, and then pumpkin strengthened to 2.72 Rand per kilo. Green beans declined to 21 Rand 38 cents per kilo, and cucumbers fell 28% to reach 11 Rand 74 cents per kilogram. Garlic continued moving higher. The average garlic price increased to 64 Rand 5 cents per kilogram, with locally produced garlic averaging 61 Rand, while imported garlic traded around 66 Rand per kilogram. Turning over to fruit, bananas were one of this week's strongest performers. Prices climbed an impressive 20%, reaching 10 Rand 22 cents per kilogram, or approximately 184 Rand for an 18-kilogram box. Improved month-end demand, combined with lower market volumes, should continue supporting banana prices. This week, we have seen an increase on apples by 4%, averaging 9 Rand 48 cents per kilo, while the pear prices edged slightly 1% higher to 9 Rand 89 cents per kilo. The apples now appear to be entering a stronger upward trend, while the pears are expected to gain more momentum from around September. The citrus market remains under severe pressure. Orange prices declined another 3%, averaging 2 Rand 40 cents per kilogram. That's now 44% lower than a year ago, while the volumes are a staggering 80% higher year on year. Those numbers are extremely concerning. High citrus volumes continue to flood the domestic market, while the weaker fruit quality, the limited export opportunities are adding further pressure. Lemon prices also eased this week to 3 Rand 86 cents per kilogram, while the grapefruit prices improved slightly to 4 Rand 86 cents. Avocado prices slipped another 1% to 16 Rand 80 cents per kilo. The market is still expected to recover towards the 20 Rand per kilogram by September. Current variety prices for avocados, we see the Forte trading at 26 Rand, the Haas trading at 14 Rand per kilo, and the Pinkerton also trading at 14 Rand per kilogram. Other fruit, table grapes experienced one of the biggest moves of the week. Prices surged an incredible 69%, reaching 82 Rand 11 cents per kilogram. This is driven by a 48% decline in available volumes. The market is now becoming increasingly dependent on imported grapes, meaning the prices are likely to remain high and potentially quite volatile. Pineapple prices this week increased to 10 Rand 77 per kilograms, and blueberries declined another 10%, averaging 65 Rand per kilogram. The current expectations around blueberries are that prices will remain at these lower levels for the rest of the year, with a meaningful recovery only expected around February 2027. What are this week's ground rules takeaway? The fresh produce markets remain divided. Potatoes, bananas, and to some extent carrots may still benefit from stronger month-end demand in the short term, but tomatoes and citrus continue facing intense pressure from high market volumes. And next Monday's public holiday increases the risk of unsold stock carrying over into the next week. The biggest story, however, still remains the weather. An unusually warm winter is accelerating production across several regions, therefore bringing fresh produce to market earlier than normal. If this trend continues, the pricing pressure we would normally expect later in spring could arrive much sooner, making August and September critical months for both producers and traders. In markets like this, success isn't just about watching today's prices, it's about understanding what's driving tomorrow's supply. Thank you so much for joining us for yet another episode of Ground Rules as we dive into the fresh produce market update. Until next time, stay informed, stay curious, and remember, the best farming decisions always start with solid ground rules.